Hi everyone, it's Steve Torso, the founder of Wholesale Investor. Short video today, and I suppose it's a bit of a tip for founders that are actually raising capital. And it's one that can massively help you because you may be missing out on opportunities that you don't currently know about. And that opportunity is that when you have an investor express interest in your opportunity, and then you go onto LinkedIn and you do a bit of a search and you think, they're a consultant, they're an advisor, they're a lawyer, they're an accountant, etc. And then all of a sudden, you don't reply to them because you think they're going to pitch you for business. What you need to understand is that private investors in this space, right, are also looking for ways to generate income in an area that they love as well or that they're passionate about. Often what they do is they make their money, whether it be in their corporate career or in their business, right? They have a bit of a break from that and then they come back in the form of an area which is important for them or that they want to go down. And often that is consulting, often that is advisory, often it is in the area of, basically working with startups, right? And they build a business around that. But it doesn't mean they're not proactively investing into opportunities. The other important thing to remember is that, not all investors. So when people think about high net worth investors, it doesn't mean that they're sitting on their entire wealth in cash, right? They've got different assets that they invest into, whether it be property, whether it be funds, whether it be just general listed companies as well, or even small cap listed. They allocate a certain amount for actual venture, right? So when people have this perception about high net worth, you got to remember it's a percentage of their portfolio that they're allocating to venture investments. So that's why it's not uncommon that when investors invest into a company for the first time, they often invest between sort of 25K or 100K, etc. when they're private investors. Some do invest up to like 250K, etc. But just a tip for you, so when you're going to your raise, just understand the nature of the way investors work in that they also need to build an income. And if you think about it, there's two different, whether they're a private investor or a professional investor, they will still look to generate an income. Professional investors do it because they professionalize it via a fund, right? Private investors do it via, as I said, advisory, consulting, etc. They figure out a way to generate income as well because they also have expenses, right? And they're not looking to see their wealth go down just by shelling out money on their own expenses as well. So they figure out ways to generate income in areas that they enjoy working. So I hope that's helpful. I said, don't immediately knock out or put a cross against someone when you go and do your LinkedIn search, when you see that they're a consultant, advisor, or some sort of professional service provider, whether you're a lawyer, accountant, etc. So from my own experience, I've got each one of those actually as shareholders in my business because I will have a conversation with everyone that expresses interest. Hope you found this video helpful. Speak soon.